I believe at some point in the future that the short-term manipulation that happens in precious metals markets will be from the long, not the short side.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 17th through June 24th, 2024, while supplies last. First, we feature Ital Preziosi silver kilo bars at just $1.79 over spot per ounce. We also have a highly limited supply of 1/10-ounce Platinum Britannia at $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest, Rick Rule, the former CEO of Sprott Asset Management, now the CEO of Rule Investment Media, joins us this Monday, June 17th, 2024. Rick, thanks for coming back on Liberty and Finance.
Duncan, it's always a pleasure. Thank you for having me back.
You cast a very long shadow in this space of natural resource investing and around their precious metals enthusiastic audience. And they have submitted, as usual, more questions ahead of your arrival here than we can possibly take a crack at. So I'm going to try to give you maybe about 15 minutes or so of rapid fire question and answer. And then we're going to talk about briefly a very soon upcoming and very unique bootcamp that you've got coming up in a couple of days, where I understand you're going to be live doing due diligence and grilling a company. And so people can learn not only about that company, but perhaps even more importantly, how to scrutinize a company in general as a potential investor. So grateful for these opportunities. We'll see if we can make hay here. And one of the first questions that jumped out at me on the list that were submitted is this one from Silver Truther. Rick, explain what it will take for institutions to start making precious metals a larger percentage of their portfolio.
I actually think that's already underway. It is true that the current bull market in gold has largely been a function of foreign central bank buying. But I think the price escalation in non-US dollar terms, which has been extraordinary, and the more recent price escalation in US dollar terms has created the momentum that has established gold as at least a legitimate topic of discussion among institutions. It's important to note that institutions' perceptions, like the perceptions of individual investors, has been formed, at least recently, over the last 40 years, in a market that's probably the most benign financial market in recorded history. The period 1982, after the breaking of the inflation of the 1970s, to 2022, world peace, globalization, the hegemony of the US dollar, declining interest rates. A complete Goldilocks scenario. Nobody was afraid of anything. They didn't have any reason to be afraid of anything. Even in periodic moments of illiquidity, the 1987 debacle, the 2008 liquidity squeeze, the lesson that was learned was buy the dips. My suspicion is that epoch ended in 2022. Clearly, there is a hiatus in the process of world peace. Clearly, there's less globalization. Clearly, the demographics around the baby boomers coming of age is past us from an economic sense. And clearly, too, the period of declining interest rates is over. In addition to that, one thing that we don't notice is the fact that the growth of government, which we were able to afford over 40 years, is over. It doesn't mean the government won't keep growing, but our ability to afford it is coming to a screeching halt. So a combination of all those things, I think, will force institutions towards more precious metals ownership.
That's interesting because you're talking about a practical reason why that would be forcing them to. There seems to be a lot of resistance or reluctance, or there's a narrative to overcome, or there's, I guess, egg on the face to be, or bit of a crow to be eaten. It seems that it's been an entrenched position that has been coming from officialdom for some time, informing the investing public that gold and silver are a bad idea. And I just saw an article yesterday saying it's one of the most, gold and silver are one of the most 5 most risky things you can do with your money. Do these other things instead, like ETFs, et cetera, et cetera, et cetera. So Is that more than inertia? Is there actually a position that needs to be walked back in order to make that happen?
Oh, well, I think you're talking about a different odd phenomenon, which is financial journalists, young people without much experience, some education, but no money, giving advice to the rest of the world. And that seems to be a particularly odd phenomenon. I've met a lot of financial journalists in my time from big news organizations. And while they struck me as being well-meaning people, they didn't strike me as being people that I would like to trust my money with. But the truth is that they do set the paradigm for many people. The institutional investor is different, but I need to say that the institutional investor is a person, and that person was schooled in the most benign economic climate known to man. The anticipation of the future is always set by the experience in the immediate past, and the experience in the immediate past was good. But let's think about an experienced portfolio manager. Let's just for fun say that Dunnigan Kaiser, as opposed to being a podcaster, is responsible for, let's say he runs the University of Florida endowment. And this money is coming in, and it needs to be sequestered in a way that will provide for the well-being of students of Florida 30 years from now. Now, for the last 40 years, he's invested in long bonds because that's been pretty sure and pretty steady. Now he has a circumstance with a portfolio of long bonds where if interest rate goes up, he gets screwed because the capitalized value of the distribution of the long bonds is worth less today. If interest rates and bond yields go down, he's screwed too, because the interest that he receives on those bonds won't be sufficient to compensate for the reduction in purchasing power that endowment will face 20 or 30 years from now. So his leading asset class, which is to say long bonds, the asset class which has made his reputation and saved the university, suddenly is challenged. Where is he going to go? Well, I suspect one place he's going to go, if he's any student of history at all, is an instrument that has fulfilled the function of portfolio insurance against inflation. I'm not suggesting, by the way, that Dunnigan Kaiser, Chancellor of the University of Florida, is going to jettison his entire long bond portfolio and put all the money into precious metals. What I am suggesting is that by rebalancing a little bit of his own portfolio or the University of Florida's portfolio, he's going to work profound change. And here's the statistic around that. The percentage of the market share of precious metals relative to other savings and investment asset classes in the United States is less than 0.5%. The 4-decade mean is 2%. If Dunnigan Kaiser, Chancellor of the University of Florida, reduces his bond portfolio by an eyelash and uses some portion of that eyelash to insure his bond portfolio, we will undergo a massive change in asset allocation in the United States. And that's precisely what I think is going to happen.
That's very interesting. And it sounds like you believe that that's already underway, and perhaps it hasn't been observed yet or admitted yet by as many people as will be in the near term.
I think about my former employer, Sprott Inc., and we worked very hard in my tenure there to develop institutional clientele, both in the United States and elsewhere. And my former colleagues, the people who still work there, tell me every day about the impact that those efforts have had. Their deep penetration into the U.S. Insurance and endowment market, their deep penetration into foreign sovereign wealth funds. What we're talking about occurring is occurring. It isn't that it will occur. It is occurring, and it's occurring as we speak.
Maybe as often has happened, it's the retail investing public that'll be the last to find out about that. Hopefully, our channel is helping to get them up to speed faster. We have a question here from Leighton Wilson, 3960, who says, I don't understand the popular strategy of buying physical silver and holding it until the silver-gold ratio drops and then exchanging it for gold. Why would anyone want gold when they can exchange their currency for more ounces of silver with greater upside multipliers and diverse utility? What am I missing?
I think they're missing perhaps two things. First of all, the silver buyer is more a greed buyer, a momentum buyer, focused on unbridled upside. The gold buyer is a fear buyer, a very, very different buyer. The second thing that, well, I think that's probably enough, actually. The motivations for buying gold and buying silver are often very different. The other thing I would say is I'm not certain why the ratio between gold and silver has any validity as an investment consideration. The fact that silver is 16 times more prevalent in the Earth's surface doesn't go to very much to their relative utility. Both have some utility as a monetary metal, but gold would seem to have deeper utility as a monetary metal. Both have some utility in commercial applications, but silver would seem to have more in commercial applications. Further, with regards to silver, the speculator needs to understand that to understand the future supply of silver, since so much of it is produced as an adjunct of the production of, say, copper, lead, and zinc, that you have no idea what the supply is going to be like 5 years from now. It'll depend on copper production, lead production, or zinc production. So I think that the equation is much more nuanced than the questioner presented.
We've got a question here that takes us into copper. The question is, can you tell us more about, this is from Diogenes 515, can you tell us more about the rationale for the Sprott Physical Copper Trust?
The genesis of the Sprott Physical Copper Trust was our institutional investors who have enjoyed our precious metals trust and our uranium trust asking if we could create a liquid exchange-traded vehicle for copper. It was as simple as that. The market came to us and said, can you guys construct a product where it will be exchange-traded, where it will be liquid, and where the storage and transfer fees are low enough that it is affordable? This is really a circumstance where the market came to us and said, we will buy this product if you will create it. I think no doubt that the extraordinary success of the Sprott Physical Uranium Trust is what caused the institutional investor around the world to say to Sprott, we need you to create a series of publicly listed liquid commodity trusts in addition to precious metals and uranium.
We talked about gold and silver. We talked about copper. There's a question here about silver producers. The user's name is so long I can't pronounce it. Would we please ask Rick, what is his favorite mid-tier primary silver producer? Certainly, this person is probably aware that many silver producers do not produce silver as their primary mining asset, but go ahead and let us know what has got your eye in terms of primary silver producers, mid-tier.
I don't have a favorite mid-tier silver producer. My favorite mid-tier wannabe silver producer is probably Pan American. I like it because of the potential upside optionality around a shut-in mine in Guatemala and another shut-in mine in Argentina, and also because of the balance sheet improvements that are taking place. But it's important to note that at least 60% of their revenues by now are gold, and that's true with most silver producers. There are a group of much smaller developers. I'm thinking of companies like, Abra Silver, Vizsla Silver, Aya Silver, that I think will do very well in a market where silver comes into favor. But in terms of mid-tier silver producers, I'm trying to think through. Hochschilds, you have exposure to some fairly ugly localized political risk in Peru. Fresnillo, which would statistically be my favorite. You have those same challenges in Mexico. The president of Mexico is openly hostile to the management of Fresnillo and Peñoles, so that's a challenge. Fortuna Silver isn't a silver miner anymore. It's really a gold miner. It's tough to find a mid-tier silver producer that one can recommend with a straight face.
I will mention here, just as a carrot to all of our subscribers and viewers, the same thing that I do is I go look at the Rural Symposium roster of exhibitors that are coming up next month in Boca Raton, Florida, 2024 Rural Symposium. And you can see a list. It won't cover every potential category, but there's a host of companies there that Rick has done diligence on. So anyway, that's an answer that I often give people when they ask me as a gold and silver broker what I think about investable silver or gold producers. And I say, well, you should probably look at the ones that Rick favors because he's inviting them. So,
and it's interesting that you mentioned that. The Silver Institute will be there, and they will be represented by Hecla Silver, which is a mid-tier silver name that, if you see an escalation in silver prices, is practically a brand name for silver. Certainly, too, another brand name for silver would be First Majestic, having spent $75 or $80 million building a shareholders constituency around silver. Those are companies that are likely to be successful in a silver bull market as a consequence of their own silver constituency. That's important to note.
Okay, let's move on to oil and gas. S. Bren 2527 asks, Rick's thoughts and ratings on European oil and gas companies such as BP and Total Energies. And do you include them in your oil and gas holdings, or do you prefer North American oil and gas?
I don't own either BP or Total because both of them have, as a consequence of European politics, de-emphasized their sustaining capital investments around oil and gas. So I don't own them. They are statistically both very cheap, and Total benefits from the overt backing of the French state, particularly in Africa. Despite that, I don't have the courage to own either Total or BP, favoring well, I shouldn't say this. I do own Shell, which is a European company that has also de-emphasized global exploration. I do own it simply because statistically it's so cheap. When I look at the European companies and I compare their return on capital employed, their growth pipeline, those types of things, I certainly prefer both Exxon and Chevron to the European sector. By contrast, the European junior sector, in particular, those run by the Lundin family, I'm talking about Africa Oil, Shamaran Petroleum, International Petroleum Corporation. Those companies are cheap by any measure. Cheap too. Well, one documentation of how cheap they are is that they're all three buying in shares. The Lundin family is using the free cash flow of the oil business over and above that money that they need for sustaining capital investments to buy in shares of the company, as opposed to issuing new shares to shareholders in return for cash. So in the European junior sector, particularly those run by the Lundins, I think are statistically cheap and can be very rewarding.
This one's pretty specific, but it's in the same neighborhood we've been talking about. Think for yourself. 8258 asks, any Norwegian oil and gas companies you're in favor of?
None that I know well enough to recommend. It's a wonderful question. They've got a great oil and gas sector there, but I don't know them well enough to be competitive.
Still related in the energy sector, E Incognito asks, best way to play coal for the next 5 years?
I don't know. I am playing it in drag, in effect. I own Teck, which is isolating their coal assets that nobody thought had any value. And I also own Glencore, a company that's doubled down on its coal space and will likely. These are not pure plays in coal, but rather these are companies that are very cheap relative to net asset value, net present value, and free cash flow.
This next question might be a little bit of a head scratcher at first, but I think it'll prick open some topics that are valuable to many of our viewers. Civil Guard and a bunch of digits says, with so much paper manipulation, I think of the metal markets, and government-fed infusions of currency into the economy, how will silver be allowed to break through the $30, $40, $50 levels?
I think what the question will find over time is that markets are bigger than politicians. When people talk about silver and gold manipulation, I remember back to the decade of the 70s, where trading desks manipulated the price of gold and silver up. Manipulation occurs in all markets, and the manipulators generally try to profit on the difference in scope and scale between the physical market and the futures market. The futures market being much larger, much more leveraged, and very prone to outsized moves as a consequence of moves in the physical market. Therefore, if you're trying to profit on a down move in silver, you would build a ladder in the silver futures markets and then use a physical position, probably borrowed, to sell overnight during the period of time when the market is the least liquid to generate the most downward momentum in silver in the short term so that you could cover your futures positions as they reacted to what happens in the futures market. That exact same strategy happened in the decade of the 70s from a long point of view. The markets are manipulated in whatever direction the manipulators think will be easy to move. I wouldn't confuse yourself in the silver market by thinking that there was a 4-decade-long conspiracy to depress the price of silver. They didn't have to do that because the market did it. The U.S. dollar was strong. You don't need to work really hard to cause something to decline that's going to decline of its own volition. I believe in 2022 that whole circumstance changed. And I believe at some point in the future that the short-term manipulation that happens in precious metals markets will be from the long, not the short side.
As long as we're talking about governments and manipulation, one last question on that topic from Bob Keesis says, do you think the printers of money also print the media and the laws?
Not all the media. And I don't think that there is as much overt manipulation of the formal media as people think there is. I think that perceptions are forged in an odd alliance of big thinkers, the World Economic Forum and all that kind of stuff. And I don't think that the leaders of government have to influence the media people too much because I think they went to the same schools and they hold the same value. Now, there are periods of time where governments can show favorites to media, but I would suggest to you that the whole emergence of social media has meant that there are sources of information and opinion that are disintermediated, that are much, much, much more difficult to manipulate. And that's one of the reasons why I am delighted with the proliferation of social media, irrespective of how much misinformation, disinformation, and impoliteness that takes place in social media. The fact is that I can get unvarnished access to opinion leaders, opinion shapers, and to popular opinion itself via social media. That's one of the reasons why I'm so comforted by its emergence. When I look at popular media, broad media, even broad media that is allegedly geared to me, Dow Jones, Bloomberg, places like that, I'm struck by the centric and complacent nature, their bias. And obviously I'm more concerned about overtly state-controlled media, the CBC, the BBC, people like that. But I suspect, again, that there's much less of an overt control of the media because I don't think they need to overtly control it. I think the values of most media journalists and the values of most defenders of big government are precisely the same. There's no need to manipulate it because it's already there.
We've got one here that I thought was a doozy. I wanted to save it for last. Robert K. 1834 asks, what is a question that Rick wishes someone would ask him?
How can I educate myself? The best investment that you can make is in shaping your own knowledge. The biggest risk that you confront is conveniently located to the east of your west ear and to the west of your east ear. And proposing to educate yourself is, I think, the most important question that people can ask. I love the opportunity, as an example, to talk to young people. And the first thing I do when I talk to young people, and also the last thing I do at the end of the interview, is say to them, 4 books. Read 4 books. You don't need to buy them. You can rent them. The 4 books are Economics in One Lesson by Hazlitt. Teaches you the way the world is, not the way the big thinkers wish it was. To get ahead materially, read The Intelligent Investor by Ben Graham. The easiest investment book, the most valuable investment book ever written, relative to the effort required to read it, which is low. When you've read that book, if you enjoy it, read the best investment book ever written, which is Securities Analysis, again, by Ben Graham. If you not only read it, but you employ the lessons over time, you will become rich. It's not that you might become rich, it's that you will become rich if being rich is important to you. Finally, read Human Action by von Mises. One of the hardest books I've ever read, the most impactful book I've ever read. When you read Human Action, you will understand why economics in one lesson works. You will understand why the intelligent investor works, and you will understand why securities analysis works. Human Action is all about the way the mind works. It's all about perception. It's all about stimulus. It's all about volition. It's all about will. Read those 4 books. Educate yourself.
You've talked to us in the past about many aspects of human action and thought, and you've talked about recency bias. You've talked about 12 presentations of information before people on average take action, even if it's something that they're interested in. And you've talked about fear, reacting to fear, reacting to greed, rather than calmly preparing yourself to be a contrarian, et cetera, et cetera. So very interesting to give us. We'll put links to those books in the description of this video. Good idea. Okay, now, just a couple of days from now, you've got a highly unusual bootcamp coming up, because your bootcamps in the past were like an all-day affair, and they focused on typically a particular industry segment and that sort of thing, or a type of metal. You did silver, you did uranium, you did battery metals, and all kinds of different streaming and royalty companies. This one's different. Can you tell us about what this bootcamp is, why it's so, I guess, real time, and what is it that people are going to get when they participate?
Dunnigan, I'm hugely excited about this. What we're going to do is take one company, brave guy. He's decided to face us for 2 hours, come what may. I'm excited because we've taught thousands of people lessons about natural resource investing in the Rural Classroom. We have 13 hours of instructional programming and 200 hours of other programming. And as you say, we've done boot camps, deep dives into various topics. This is how to. This is where you employ the lessons that we've taught you in the Rural Classroom in real time. I've really enjoyed due diligence personally. The process of it is interesting. There's tension to it. It's amusing. I've often thought, when I was sitting in a boardroom spending 2 hours with the management team determining whether I was going to buy stock or participate in a private placement, this is actually interesting. I wish that people could watch over my shoulder while this takes place. I can't imagine anything I'd rather be doing with my time right now. And so Albert and I have been wondering just exactly how to do this. And we spent about 6 months wasting time trying to figure out what to do. And then we decided, you know what? Let's do it. Let's just do it. And then let's let the audience tell us what we did right and what we did wrong. I guarantee that for people who are interested in the process, that it'll be fun. I guarantee, too, that for people who are interested in making money in natural resource investments, that the lessons that you learn at the Rural Classroom, you will see employed in real time. And this will absolutely make you better at your own due diligence. We would implore anybody who watches this to let us know in the comments what we can do better. We are doing this one to learn how to do it. So it's going to be a little rough around the edges. I suspect if we're able to do this over time, that we're going to introduce you to a lot of great companies, because I suspect it'll be a self-fulfilling prophecy. Most company managers, if they understand that the company that they run is lame or halt or blind, is going to have the good sense not to show up for the questioning to begin with. So what we're going to be really is a filter of the best of the best. And I think that's a very exciting prospect for natural resource investors and speculators.
We'll put the details in the description of this video, and we'll put a link to how to register. And folks, it's coming right up. So make sure that you're taking a look at that, because it sounds like it's all going to happen very quickly. It won't take an entire day of your time. It'll only take a few hours. And it sounds like a mega dose, a real masterclass in a hurry, like drinking from a fire hose. So one thing that I think people can relate to probably is that when they've watched for example, a professional golf or professional tennis or professional pickleball or something, and then they go out, something that they already enjoy or something that they would like to do better, they find that by seeing someone do it very well, there's some of that rubs off. There's some of the process. There's some of the preparation and process that rub off. And this is something that's very intentional in this case as a learning opportunity. And it sounds like it's dual purpose, at least, learning how to do the process and also getting insights in the particular company that's in the hot seat.
It's also, Donegan, for people who are interested in your show, it's interesting and amusing. We mean it to be profitable. But the truth is that there's going to be some interest. There's going to be some tension. And by the way, I'm not going out to ambush this guy. I'm not going out to embarrass him. What I'm trying to do is figure out for my money and for yours whether his company is a good place to park my money.
Well, people have been following you here on this channel approximately monthly for about a decade, and we've come to respect your experienced judgment as a mentor and as a teacher. And this is a way to not just sit by your knee, but to watch over your shoulder as you do what you do, which we usually, that all happens behind closed doors to us. Normally, you come and talk to us about some of the wisdom you've brought down from on high, but here we're going to get to see you in the process, and that'll be a new opportunity we've never had before. So thank you for making that available. And there's the other big deal that's coming up is next week. We mentioned it earlier, the flagship Boca Raton Rural Investment Symposium in Natural Resources next month from the 7th to the 11th of July in Boca Raton, Florida, and available for remote viewing for those who can't make it to Boca. And any top points you want to leave with us for people who are on the fence about whether they should attend at all, whether they should attend in person, whether they should sign up for the remote viewing experience?
Well, Boca represents the best work that I and my team do. It's the focus of our educational efforts all year. Everything that we do at Rural Investment Media, everything that we do in the rural classroom is all really around this sort of pivotal event. For your viewers who don't know about it, I believe it's in its 28th year. I'm not certain. And the very fact that it survived for 28 years tells you something about the quality of the event. We have a very high caliber group of people who have come year after year after year. And you can learn from those people. The first thing I want to say is not all the knowledge in the room emanates from the dais out to the crowd. There's lots going both ways. So pay attention to those who are around you. Whether you attend live or in person, I, of course, would prefer that you attended live. There are several promises that I make you. The first is that we're going to bring you absolutely superb macro, really big picture thinkers who tell you about the way the world is, not the way that the aforementioned media would like you to believe it is. Jim Rickards will talk about the structure of the financial community. He'll talk about it because he was general counsel of long-term financial management, which almost brought down the financial system as we knew it at the time. Talk about learning a lesson in the belly of the beast. Daniela DiMartino Booth will talk about the Fed because she was at the Fed. She knows how it works. She knows the institutional bias. Nomi Prinz will talk about the structure of Wall Street as a former partner at Goldman Sachs. After you've had your worldview shaped, and after you've come to understand the real thesis around natural resources, we'll introduce you to portfolio managers and analysts who've been making money in natural resources through good markets and bad for 3 or 4 decades. Too often, you hear about natural resource markets from financial journalists or investment bankers who flunked at technology and flunked at consumer durables and parachuted into natural resources because the sector was too small for them to do much damage there. That's not how we do it. Better yet, we introduce you to a group of people called the living legends. These are people who have built multi-billion-dollar natural resource companies from scratch, talking about how they did it, what they learned, what mistakes they made, what successes they enjoyed, telling you specifically how to identify the $5 million market cap company that's going to be a $5 billion market cap company. This is really, truly where the rubber meets the road. Another feature, every single public company exhibitor at our conference has been vetted by us. We own shares in them. No guarantee, Donegan, unfortunately, that if I own shares in a company, it goes up. But there is a guarantee that the process is honest. At every other investment conference I know, the qualification to be an exhibitor is a check that cashes. That's it. We need to know the companies. And by the way, every service provider has to be a service provider that I have encountered no complaints about. If you think about bullion dealers or coin dealers, there are probably 1,000 in the country. There are 5 or 6 who are allowed to exhibit at our place because in 30 years of public practice, I encountered no complaints concerning them. And all of those attributes allow me to make an offer to attendees that is unlike any other offer made by any investment conference in the world. Whether you attend live in Boca Raton, which would be my preference, after all, you get to meet Dunnigan Kaiser there. If it's inconvenient to you for whatever reason, we had attendees from 33 countries last year via live stream. You can attend the conference from the comfort and convenience of your own home via live stream. In either case, over 4 days, we're going to present you 60 hours, more or less, of programming, more than you can possibly absorb. So every proceeding, including the breakout sessions, will be recorded. Whether you attend live or live stream, you'll have access to those recordings for the rest of the year so that you can get full advantage of the 60 hours of programming that we try to cram into your head over 4 days. Finally, this, Dunnigan, if for any reason you attend via live or via live stream and you don't think that you got your money's worth, we have a gold-plated money-back guarantee. No questions asked. Email me, say, Rick, I didn't get my money's worth, and I'll give you your money back. The financial risk is all mine. Now, the truth is that we've had to refund very little money over the last 28 years because the product has been so good. But your guarantee that the product is good is your guarantee that I'll give you your money back if you don't think it's good.
And one last offer that you often extend to our viewers and subscribers is to rank their natural resource portfolios for free.
Always. We've now ranked over 80,000 natural resource portfolios, and we'd love to rank yours. Remember, natural resource stocks only. No crypto, no tech stocks, no narcotic stocks. Go to ruleinvestmentmedia.com, list your natural resource stocks. I will rank them 1 to 10 if I know them. If I don't know them, I'll just have to say no opinion. Once again, ruleinvestmentmedia.com. I will rank for no fee, no obligation your resource stocks. I'll comment on individual issues if I think my comments might have some value to you.
Rick, we're always grateful for your presence here with our viewers and subscribers. Folks, if you haven't subscribed to Liberty and Finance, make sure that you don't miss a single interview with Rick by going to libertyandfinance.com, entering your email address, clicking submit, and then make sure you confirm on the confirming email. You'll get 1 email in your inbox per day with all of our interviews with Rick and any of our other guests and our weekly specials, and you won't miss a thing. And we won't share your email address with anyone, and we won't spam you. So free and easy at libertyandfinance.com. Rick, as always, on behalf of all of our viewers and subscribers, thank you for joining us on Liberty and Finance.
Dunnigan, thank you for the opportunity, and thank you, too, for coming to the Natural Resources Investment Symposium. I look forward to hosting you personally and your family in Boca Raton.
It's always great to see you there, and I just wanted to let people know how warm and hospitable you are to people. You go out of your way to make people feel welcome there, and I think everyone appreciates that, and it's great to meet a lot of the people that we've seen glimpses of on interviews and to find out more about their companies, et cetera, and to find out more of their team, to meet more of their team. So it's a great opportunity.
Well, our aspiration, which your older listeners will understand, is to be Resources Woodstock.
Let me just say it's a lot tamer than that, but still a lot of fun. Thank you, Rick.
All right. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 17th through June 24th, 2024, while supplies last. First, we feature Ital Preziosi Silver Kilo bars at just $1.79 over spot per ounce. We also have a highly limited supply of 1/10-ounce Platinum Britannia at $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.